we're in the end game and soon game over for the dollar. That's my conclusion, Elijah.
This video is brought to you by MilesFranklin.com. If you are considering the ultimate financial insurance of physical precious metal ownership, Miles Franklin has been supplying it for the past 25 years. Rated A+ by the Better Business Bureau, it is well known for competitive prices and industry-leading consumer service from brokers with, on average, 2 decades of experience. Not to mention the industry's best financial blog, offered each and every day for free. Whether you aim to buy, sell, or store precious metals, Miles Franklin promises to treat each consumer like family. They can be reached online at milesfranklin.com or by phone at 800-822-8080. Still on the topic of this gold standard, do you see that when this gold standard is implemented, there will be a revaluation of the gold price?
Yes, I think the BRIC nations, the BRICS, that's Brazil, Russia, India, China, South Africa, those are the lead nations in the BRICS movement, I call it. They've developed an alliance. And the alliance, amazingly, has something like 140 nations that have signed up and said, yes, we will follow your lead. Their lead for what? Their lead to bring about the gold standard and to retire the dollar. And at the same time, bring in the Shanghai Co-op organization, the SCO, and make it more of a military-type security organization to counter NATO. Okay, so the BRICS alliance, I think they might do something unusual, like make Argentina a pet project for rescuing it, doing some reconstruction, reforming its system, and then bringing about a revival. What a showcase that would be. Or maybe they'll do it with Cuba. Notice the United States kind of opened the window toward, what's the word, softer, smoother, more relaxed relations with Cuba. Well, why'd they do that? Well, because China and Russia together posted $5 billion in aid for the tiny island of Cuba in our backyard. The U.S. government's foreign policy is insanely upside down, insanely tilted toward destruction of the global economy. It's more favored toward narcotics support than it is U.S. economic support. So the gold standard will come about through the BRICS movement. They've got some plans. They have what they call the gold trade note. It's going to serve for the BRICS nations and their 140 nations in the alliance. The gold trade note will serve as letter of credit in bilateral trade. The letter of credit will require a posting of gold in order to obtain the letter of credit. In other words, we're moving to gold-backed trade. If the United States, with its Ukraine war, violated the global currency reset accord, what they essentially did was said, the gold standard will not come through the Forex currency window, not its platform. Okay, the East says, okay, it'll come through the trade platform. And this is where the gold price is going to be really severely affected on the upside. The gold trade note is just the beginning. That's to facilitate and lubricate bilateral trade. I believe this new development fund, I call it the BRICS Development Fund. The new development bank. I call it the BRICS Development Fund. I believe half of it is going to be for infrastructure problems, and the other half of it is going to be for a gold central bank. Now, you look at the numbers. They don't add up. The BRICS Development Fund claims to have $200 billion in pledges, and I think they're they're halfway there now, 100 billion in pledges. I'm sorry, 100 billion in funding and another 100 billion in pledges, a total of 200 billion. You take a look at the development projects. Well, it's 2 billion here for a Tanzanian railroad and $1.7 billion for a Nigerian railroad, and maybe $1 billion or not quite for connecting Nigeria with several neighboring nations. Add them all up. You don't get anywhere near 100 billion. So what's the rest of the 100 billion going to be for? Well, that's going to be maybe for projects for Bangladesh, or to make railroads all the way down to Vietnam and what do they call it? Cambodia, Kampuchea? I can't remember. Anyway, the old Cambodian nation. So, okay, fine. But that, you can't even explain 100 billion in the BRICS Development Fund for spending on the budget. So what's the other 100 billion going to go for? Well, maybe it'll go for a BRICS gold central bank. Now, just some rough figures, 8,000 tons of gold is somewhere around 400 or 500 billion dollars. So figure a quarter of that would be about 2,000 tons. Rough figures, Elijah, rough figure. So $100 billion from a BRICS development fund, if devoted to gold sourcing, could come up with maybe 2,000 tons. That's a good start. Maybe the Saudis and the Chinese will post a bunch more of their treasury bonds to source the BRICS central bank. Okay. We've got all these different movements. We've got, let's just cover for a minute the Chinese efforts here that are going to work toward gold. You've got RMB hubs. RMB, for those who aren't familiar, stands for renminbi, a funny word. It means people's money. It's the informal name, an acronym, for the Chinese yuan. Y-U-A-N, not to be confused with the won, W-O-N, from South Korea. Okay, so they've got these RMB hubs, and there are two major ones right now. One's in London, one's in Frankfurt, Germany. The hub is known for two functions. It's for converting currency in and out of the RMB, the Chinese currency, and it's also for facilitating the issuance and the sale and payments for RMB-based bonds. Like, think of McDonald's, the U.S. company, the fast food crap company. They make lousy food that make people fat and really harm their health. But McDonald's has a RMB bond for their corporate bond portfolio. RMB hubs sell such things. They sell the Chinese denominated currency bond for Western companies. Okay, now add to that, what is it, 30 different yuan swap facilities that China has instituted across the world. It's not just with Asian countries. It's with London, Switzerland, France, Germany, Australia, New Zealand, Brazil, and soon Argentina. I think Argentina's just signed on. So I look at these as stepping stones, bilateral stepping stones. Put a piece of wood between China and Australia, another piece of wood between China and Brazil, another one between China and London, another one between China and Germany. Okay, then you got all these bilateral planks, and on those planks you can put a platform. And just think of the earth as flat for my metaphor. All these planks will support a platform, and that platform is RMB-based trade. So I believe the Chinese currency is going to be used as a stepping stone, intermediary, interim feature toward gold trade settlement. Now, there are a lot of arrogant Western economists and financial so-called experts who say, oh, the Chinese RMB could never serve as a reserve currency. Well, if you have a significant amount of corporate bonds that are being used and issued in RMB currency, well, then you've got, a lot of participation in the corporate sector. Now, if you get a lot of different nations buying Chinese government debt and just putting them in their banking system, then they are using it as a reserve purpose, a function. Okay, just now fast forward for much more bilateral trade with these gold trade notes, while at the same time, all kinds of yuan swap facilities are bypassing the dollar. Then rather than say the Chinese currency could never become a global reserve currency, instead look at the complement from a mathematical side. Look at the other side, the other angle. The dollar is not going to be serving as a global reserve function. If not the dollar as a global reserve function in banking, then what? Well, what's going to fill the void? And my answer is, what is going to be the basis of global trade settlement? The answer is Chinese RMB and gold. So I don't care if the Chinese currency becomes a global reserve. I just care that the dollar is not. And we've got two major movements, the yuan swap facility, and more recently, the last couple of years, the RMB hub phenomenon, London and Frankfurt. There's going to be a big competition between London and Frankfurt. And Germany's going to win. London has this 1,000-year history of being a financial center with an RE. Fine. Germany has a lot of trade, a lot of relationships with Russia and China, and they're not going to give it up. Sanctions or no sanctions, they're not going to give it up. And with this trade with Russia and China, there's a lot of RMB transactions to be completed. And there's a lot of Chinese companies that are going to want funding with European sources and money for the corporate development, the capital formation, the business creation in China. They're going to be using the Frankfurt hub. They're going to be throwing crumbs at London while the main meal for capitalization will be done in Germany. So you have all these different movements. And I think it's pretty obvious to anyone with an open mind who's not wearing red, white, and blue undergarments that the dollar is not going to be the center for global trade and therefore not the center for banking reserve systems. When the global banking system concludes that the dollar is not going to be working for them anymore, and furthermore, the QE bond monetization has turned toxic, the dollars and treasury bonds sitting in their banking systems, they're going to be looking for a different way. They're going to be looking for dumping their treasuries, which I think will bring about QE4 and QE5, because the Fed's going to have to lap them up, soak them up, and pick them up so that the dollar doesn't crash. So rather than see a dollar crash, we're going to see a dollar rise. The dollar is like a rocket. It's dying and going up. And then you have the gold standard coming in. And when the standard comes through trade and the treasury bond is dumped, and it's quite clear the Federal Reserve is printing more dollars to cover the dumped treasuries, we're going to see a quick move to 3,000 in the gold price and $60 in the silver price. It's going to be facilitated and prodded along in Shanghai, where they've actually got gold traded and settled and delivered in their futures contracts. In the COMEX and London, since June of 2012, there's been no delivery of gold in any futures contracts on settlement. They're all cash settled. It really fortifies the argument that the COMEX is not a gold market. It's a gold paper manipulation center and not a market. Not a market at all, because they don't even honor contracts. There's no contract law applied in the COMEX. Therefore, it's not a market. There's no equilibrium between supply and demand. Therefore, it's not a market. There's no delivery of gold on contract. It's not a market. Try buying a television set at Walmart, walking out the door, and they say, there's no television for you, but we'll give you cash. And you laugh at them. Why isn't the COMEX being laughed at? Well, it is, by people who have a brain that's functioning. We're going to see a $3,000 gold price from a quick move to this gold trade. And then we're going to see a $5,000 price from a movement that tries to achieve some equilibrium. And then we're going to get recognition that the central banks of the world are sitting on a mountain of treasury bonds that are worthless in their portfolios that have risen by a factor of 4. And therefore, we must increase the gold price from, say, the 1,500 to 2,000 water level. We must multiply it by 4 to 6 or 7,000. And then you must achieve some real equilibrium in the market, because previous attempts at equilibrium did not succeed in getting rid of the shortages. For instance, right now, gold mines are being shut down. It's not a sign of equilibrium. It's a sign of breakdown. And then the last point is the allocated gold accounts in Switzerland primarily, but also London and other points in Europe, but it's mainly Switzerland and somewhat London. They're short 40,000 tons of gold that they've stolen from their client accounts. They don't call it stolen. They call it rehypothecated. They don't call it stolen. They call it replaced by gold certificates. Well, the clients might call it stolen, and I'm told that there are a gaggle, hundreds of client lawsuits against the Swiss banks right now and the London banks for improperly using the client private gold. Improperly. And much of it is Arab. Some of it is Japanese. A good deal of it is also European. There are class action lawsuits. There are very high-profile legal firms involved, and there is zero news coverage. That doesn't mean it's not happening. It just means that the dull, insipid, ignorant public in the West is not aware. So that's going to drive the gold price from 10 and 12,000 to 17 and 18,000. These are all future events.
We've talked about before about investing in gold and silver. Do you see that right now when we're seeing gold and silver going down, oil prices going down, because there's this sort of strengthening of the value of the dollar? Do you see right now when the prices are low, it's a great opportunity to invest in gold and silver if, as you're saying, the gold and silver prices are probably going to go much, much higher?
I think they're going to skyrocket, and they're going to be taking quantum jumps. You won't see a gradual move to 2,000 again. There's going to be probably a sudden move to 2,600, like an overnight move of several $100s. That could come about when Shanghai just doubles the gold price. And they've got motive to do it. They're at war with the United States from a financial sense. They've got more motive to do it because they're really draining London and Swiss sources dry. The Swiss can't steal much more gold, and London pretty much is dry on gold. The Bank of England is pretty much at the bottom of their barrel, and what they're doing is they're getting some relief supply shipments from Basel, Switzerland, and the Vatican. Well, those two sources are pretty much at the end where they say, London, we don't really have much more for you. When the Chinese can't get more from London, that's when they double the gold price. These are not complex sequence of events. They're just extraordinary and very difficult to swallow when people are wearing red, white, and blue undergarments and waving their flag at every opportunity. I call it the captured flag. I don't see it as the dollar being strong. I don't see it. I take exception to the phrase strong dollar. No, it's got a rising exchange rate. Doesn't mean it's strong. I make the argument, and I have made the argument for this full hour, that the dollar is dying, that the petrodollar has been shattered, and that the derivatives have been disconnected, which exposes all kinds of derivatives to settlement, and the derivatives are settled and closed out in dollars, which brings about a dollar demand. So the dollar demand is not from commerce. It's from dying, destroyed derivatives that hold things together. Now nothing is holding things together. The relationship between currencies, sovereign bonds, bank equity, and stocks is all being destroyed. So when all these things are more evident to the public eye and the leaders of, say, commerce, industrial titans, when they're tired of following the central bank party line led by King Rothschild, they're going to decide we need to go to the solution, the only viable solution, the only bona fide and legitimate solution, and that's the gold standard. And if the United States blocks the reinstallation of the gold standard through the Forex currency window, then we must do it. From the trade side, the trade platforms, settle no more in dollars, no more accumulation of treasury bonds. We settle with gold as trade notes, we settle in RMB in bilateral trade, and we get away from the dollar. 2015 is going to be the year where the entire world concludes we must reject the dollar because it has been turned toxic from monetary policy, not just by the Fed, but by the Euro Central Bank, the Bank of England, and the Bank of Japan, and the Swiss National Bank. They're buying up euros to prevent their own Swiss franc from going into orbit. The safe haven has been Switzerland, and they're trying to prevent the Swiss franc from rising from all the escaping money in Europe. So they're buying up the euro, and now they're sitting on it's hundreds of billions of dollars worth of euros. Well, they need to get rid of it and buy back their Swiss franc. So the Swiss franc is going to rise 20, 30, 40, 50% in this reset. And that's going to wreck their economy. 2015 will be the year when it is very well understood that the dollar must be put to death as a solution to the ongoing crisis, because removal of the dollar has not been any part of any solution. 2015 is going to be the year of global breakdown of economies and financial structures, and you're going to see it through the oil sector. 2015 is going to be the year the BRICS alliance gains global momentum for subduing dollar terror. Now, this is pretty crazy, but let me leave you with a fact. I told you that 87% of all marginal new oil output since 2007 has come from the shale sector. Here's another closer statistic. Just the last 5 weeks, the number of oil and gas drilling rigs in Canada has plunged 64% in 5 weeks. The active number of drilling rigs for oil and gas in Canada has fallen 64% in 5 weeks, from 438 rigs on November 26 to 156 rigs on January 2nd. Canada is slowly shutting down its marginal shale output. Do you think the price of oil will respond going up? So, the morons in the crowd say, "Oh, we're going to $20 oil." And the other morons on the other side of the room are saying, "I can see $800 gold." These are your freaking idiots exercising their flapping gums. we're going to see $3,000 gold. We're going to see $100, $150 oil. Unless we get something really strange coming out of left field in the energy sector, like widely available energy sources, for instance, cold fusion. There are a lot of things coming up in 2015 that are going to knock us off our feet. I'm only talking about here the death of the dollar, the retirement of the dollar, the shoving of the toxic dollar into the dustbin of history. It's been a sick, terror-ridden currency backed by war and banking hegemony that survived half a century almost. Its time is done. It's time to go back to the gold standard, the only viable solution.
To wrap up and to get back to investing in gold and silver, did you want to discuss about what form of gold and silver you think people maybe should look into investing in? Because I know we were talking before the interview and you said that right now mining stocks are not a good opportunity right now. Did you want to discuss a little bit about why and what form of gold people should be investing in?
Yes, I'll address that. What we're seeing now with the slow motion pathogenesis and death of the dollar, which is dragged down like a 2-ton millstone, the demise of the petrodollar. What we're seeing is a wreckage in true value of stocks, of paper-based financial assets. You may see a high value on the Treasury bond in its principal bond value. You may see a high value in the S&P basket of stocks. You may see a high value in a banking stock or an energy company stock. You might see a high value in the Portuguese sovereign bond. You might see a recovery in the Italian, French, and Spanish sovereign bond. But their value is defined in a perverse way in dollar terms, in euro terms, in British pound terms. These currencies are going away. The currency reset is just the beginning in the retirement of these currencies and the conversion of them into something more legitimate. I said back in 2008, in the early months, get out of the mining stocks. Accumulate gold and silver bars and coins, because these stocks are going to go down, down, down in value, and that's exactly what they did. We've got two important records that have taken place. The percentage of mining stocks that have gone down 90% has hit record levels. And also the number of mining stocks trading for 1 penny or less has hit a record number. People might say, well, gee, that means they're a great value. What are they denominated in? Is the currency they're denominated in going to be going away? And furthermore, are these companies so broken that they're going to be bought out as acquisitions by larger companies? And if so, what larger companies will be doing the buying, and will they be Chinese? And furthermore, if my little XYZ junior mining company gets bought out, it's trading at 2 cents right now. If it gets bought out, will I not own just say a bunch of Barrick stock or Newmont stock or Royal Gold stock or some South African mining company stock? And will that company eventually be bought out by the Chinese? So I think buying mining stocks is a fool's enterprise. Why not buy at a grotesque discount a silver coin where there's no risk of, say, some company buying it out and giving you some shit paper in redemption, in conversion? Why don't you try to hasten the demise of the criminal control of the COMEX by adding to the gold and silver demand on the physical side. Hop on board to the gold and silver train, gold locomotive and the silver cars. We talk a lot in the gold community about how physical demand will wreck the COMEX. But still, you've got a lot of its followers buying mining stocks, which do not add to the gold and silver physical demand. You've got gold in backwardation, which means the future price is lower than the present price. That's backwards. It's got a negative carry, as they call it, which means there's no premium put in for any kind of vaulting or insurance for holding gold. So everything moves to the current month. This is how you see manifested the shortage. They're not holding gold in the future. They're bringing it to the present and accelerating the shortages. So I have not advocated Elijah at all for 6 full years now. Actually, it's 7. 2008. It was March and February of 2008. I made that advice. So here we are, January of 2015. It's hard to think of 15. Always hard to think of the new year. I'm glad I don't write any checks here because I used to get the year wrong, and sometimes I send the check back. But 2015 is going to see some rather magnificent changes, and it's not just going to be with the dollar and the gold being reinstated. It's going to be in new trading systems. We're going to see far more barter. And the leading nation for barter right now is China, with all of their bilateral yuan swap facility. That's barter. It's China and Brazil having their trade, 3 big Chinese banks, 5 big Brazil banks. They settle it out on a net basis. They've got a net difference after the month. They carry something forward. They make new deals to cover the carry, the surplus. And they don't use dollars. That's barter. That's barter with a carryover. There's going to be a lot more barter in this year, and I'm looking forward to seeing whether, say, Bitcoin or other cryptocurrencies will be folded into some kind of a legitimate vehicle for retail credit cards, retail debit cards, actually, or debit cards. I don't want to see Langley or the U.S. government or Wall Street involved, though. If ever they're involved, stay away from it, because that's to steal any gold basis inside it. These companies and agencies have a long history. They steal gold, and they talk about how gold has no value. So 2015 is going to be a very, very significant year. 2014 was the breakdown year. 2015 is the resolution year. And I'm looking forward to it. And, we got a number of strange events. Germany just recently said, well, let Greece default. Wow, really? Let them leave the European Union. Really? Translate that. It could mean that the German banks are declaring, we've taken all their gold and we've taken all their useful, valuable assets as collateral. They've got nothing more to offer us. But it also could be the white hats from the East ordering Germany, let Greece go, in order to start the process of bank failures among the major Western banks. So we've got a lot of events that are coming, a lot of things in progress, and a lot of subterfuge. I mean, there was a kidnapping of a Saudi prince about a month or 2 ago, and he had in his possession some Russian contracts. And hey, the U.S. government wanted those contracts. They wanted to see them, so they kidnapped a Saudi prince. You had last week French President Hollande announcing that he wanted to see an end to the Russian sanctions. They really didn't serve a useful purpose and were doing a lot of damage to the European economy. And what was it, 2 days later, there was a shootout in a Paris restaurant. And does anybody connect the two events? I did back in 2011. The Norwegians said we're not going to support the London banks with $600 billion from our pension fund that's based on North Sea oil and gas over 2 decades. We're not going to support the London banking system with our $600 billion. The next thing you know, they had an Oslo bombing shootout from a lone gunman. Now the lone gunmen are Arabs. I maintain the point that Langley maintains all kinds of cells in Europe of Arabs on salary. And 24 hours notice, they can go shoot up some restaurants. This is how the United States is going to try to keep Europe from going to the gold standard and joining the Eurasian trade zone, following the BRICS movement lead by Russia and China. And it's going to backfire, like everything the U.S. government has done in the last several years. The Iran sanctions backfired, produced the prototype for oil for gold trade, the Turkish intermediary of gold provision. The Russian sanctions are going to backfire. Already Merkel is saying, no, we need, as a continent, we need the Russian Gazprom South Stream pipeline. We need it. The Germans are not going to tolerate the sanctions much longer. There are already demonstrations. There was a YouTube I saw before Christmas where Chancellor Merkel of Germany attended a business conference. She could not speak. She was being heckled. The ones who did not like the sanctions, did not like the damage to their corporation, did not like the interruptions to their Russian trade, they heckled her and she could not speak. Wasn't even in the news. No, this is, Germany's going to, pardon me, Germany is going to be, I'm losing my voice. Germany is going to be the focal point for Europe turning to the Eurasian trade zone following the BRICS alliance lead. However, Germany is probably going to enlist, they're sometimes called their proxy agents, they're going to enlist the help of France, Netherlands, and Austria. So let those smaller nations take the heat, let the Germans run the interference, and then let the Germans, with all of those nations together, and possibly Finland as well, they will leave the European Monetary Union and discard usage of the euro currency. This is what I see coming. So in the hat trick letter, found in goldenjackass.com, www.goldenjackass.com, you'll see a lot of free articles and public domain interviews like this, far more interviews than there have been public articles in the last several months. It's because I'm getting interview requests. They see that a lot of the forecasts that I have put out there have come to pass. I'm running at an 80 to 90% correct forecast rate. I give a lot of credit to my staff. I give a tremendous amount of credit to the voice who tips me off on certain phenomenon and kind of steers my thinking, steers my vision. And he said, no, Jim, you need to see it this way. Look at it this in this angle. So I do, and I run with it and come up with some independent thoughts, but within his framework. So it's resulted in an 80 or 90% correct forecast rate. Each month there are 2 reports. One's called the Global Money War Report for very high-level issues, but very relevant issues. And the other one is ground level. It's the Gold and Currency Report. So it's a labor of love. It's been over 10.5 years now. And it is a lot of fun. I wish the content were more pleasant, but it's very stimulating to do the work. There's nothing boring about this body of topics, and the forecasts are really for world-changing events. So we're on the cutting edge here in the hat trick letter, and there are other publications that have a strong track record. But if you look at Wall Street and U.S. government forecasts, you find, I don't know, 10, 20, 25% correct forecast rate, and they don't care. Their purpose is not to make correct forecasts and to help you to plan your business or your personal finances toward life, what do you call it, life savings, and you know, managing your strategic life savings fund, your pension. They don't care about your managing your business or personal finances. They care about sustaining the dollar. So they bought time. If you look at the annals of history, you see that about 30, 31 years was the limit for a sustained fiat-based, unbacked currency system. And right now, since 1971, we're looking at, what's that, 43, 44 years. So we've set the world record for a crummy, baseless, toxic, corrupted currency called the dollar. And it's falling apart. But how do we get those extra 10 years? Easy. By stealing gold in various nations, including the Arabs, by having sanctions against any country that wanted to trade energy outside the dollar, just see Iraq and Iran, by imposing sanctions against nations that don't want to do dollar-based trade anymore, and by going to war. The U.S. has run out of enemy states to plunder, and now we're attacking to pilfer from our allies. We're going to make enemies out of the entire set of Western European nations. The core nations like Germany, the Dutch, the French, the Austrians, they're going to, for expedient, leave the dollar and join the BRICS. But the southern nations of Italy, and Spain, and Portugal, and Greece, they're going to seek out new partners because their economies are wrecked. And here's a wild card that I'm going to put on the table for you, Elijah. The Russian reverse sanctions, they refuse to buy European agricultural products, food and meats. Of course, you might see some leakage through Turkey, because Turkey will sell anything as an intermediary. But I think we're going to see in this year, we're going to see some failures of large agri-businesses, farm businesses in Southern Europe. In particular, Italy, Spain, France, and Portugal. And the Chinese are going to buy them up. And after they buy them up, they're going to learn the tough lesson. When the Chinese buy a farm, they're going to divert 1/3 of the food output to China, just like they did in the American example with alfalfa and hay feed for livestock. So this year you're going to see the Chinese invade Southern Europe for their farm industry, and there's going to be a loud outcry to stop these sanctions and to stop the Transatlantic Trade and Investment Partnership, the I'm sorry, I can't think of it. All right, it's in Europe. You got the Transatlantic Trade and Investment Partnership, TTIP, right? In Asia, you've got the Trans-Pacific Partnership, and both of them are failing. Both of them are stalling. Both of them are derelicts. I could go on for 20 minutes about the ugliness of these trade pacts that the United States is trying to do. I'm having trouble closing here because there's so much left that I haven't discussed. The U.S. is using the Ukraine war to force European nations to have their political leaders report to the NATO commander. We're actually making a state of war in Europe so that we can militarize their political structures and fold them under the NATO Supreme Commander. The Europeans are not going to tolerate this. To ally and maintain alliance with the United States means a war with Russia, whether it's financial, trade, or military, whatever, it's a standoff militarily. It means wrecking their economy. They're not going to do it much longer. They're awakening. And I think they're going to awaken to the terrorism like what you're seeing in Paris, done by Langley. I'm 99% sure it's done by Langley. Notice that a driver's license was conveniently left behind in full view on the front seat of a car. Now, what professional would do that? Reminds me of the driver's license not being melted down on the 9/11 attacks. The driver's license of the kids made as scapegoats. No, that was another Langley attack. But a lot of cooperation in 9/11 with secret societies and foreign central banks and the Vatican and other groups. That was a major, major project and bank robbery. Okay, I've said enough, Elijah. This is, we're in for a very rocky year. I don't know how it's going to end, but I know that it's going to break apart. Things are going to break in open view as the world cries for a gold solution. That's the point for 2015.
All right. Well, Jim, Willie, thank you so much for your time today and sharing your forecast for 2015. I guess, did you want to just quick remind our viewers where they can find you?
Well, it's www.goldenjackass.com. I mentioned that, and maybe it's a good way to close. On that, you'll find radio interviews, public articles, and a button for subscribing to the Hat Trick Letter. That includes 2 reports, Global Money Report and the Golden Currency Report. I invite people to go to the site, come up to speed, read more, add to your already current speed. And I don't have all the answers, but I've got a ton of information, a lot of analysis, and the most common compliment that I receive is, you tie this together very well. You tie numerous different arenas and factors very well. So I invite people to come to the website and sign up for the newsletter. I thank you for your time.
This video was brought to you by ReluctantPreppers.com. Click here to listen to Reluctant Prepper's latest interview with Jim Willie, where Jim Willie outlines the seismic shift that has been ongoing for decades away from the US dollar, accelerating in recent years and months across the globe. Willie spells out how the dying dollar threatens the average family and what you can do to prepare and protect yourself. Click here to subscribe for free to FinanceAndLiberty.com and also our sponsor, ReluctantPreppers.com, helping you be aware and prepared.